What's up, guys? Roger here with Vantage Realty and Home Loans. Mortgage rates have officially surpassed 5%, the highest rate in 10 years. What does that mean for you as a homeowner? What does that mean for you as a home buyer? So let's dive right in. We're going to be looking at, first, we're going to look at the Wall Street Journal article and look at some data here on the housing market. So mortgage rates over 5% for the first time in 10 years, yet demand remains robust. So let's look at the important pieces of information in this article. So this is the first time in 10 years, highest level since 2011. Just 15 months ago, mortgage rates were at all-time lows, and you were looking at a rate around 2.6%. So today versus 15 months ago, the average monthly payment for a home is up 38%. So if you bought a median home in America, anywhere in America, you put 20% down, your mortgage would be about $1,223 a month. As of today, it would be nearly $1,700, a 38% increase. Pretty big increase. So let's keep diving through this article. So this is a chart of rates going down, pandemic came up a little bit down, and then look at this surge. So the Fed has been raising rates. That's why you're seeing this huge surge in 2022 and rates over 5%. I think it's going to get worse before it gets better. We think rates will be 6 to 7% before they drop down back into the threes. That's our prediction. So that's what I think is going to happen here. So bankers and economists say that pricier mortgages are cooling the market, and I agree. I think this is going to cool certain areas. Some parts of the country are still going to be booming, but some parts will cool off a little bit. So if you're in a very, very high demand area, you're probably going to see continued price increase, and still it's going to be very competitive to land a home. Wells Fargo and JP Morgan Chase have both reported mortgage origination fell 27% compared to a year ago. That's Wells Fargo. JP Morgan Chase saying their origination dropped 37% compared to 1 year ago. This is from the Wall Street Journal. I'll put all of these links in the description so you could check it out yourself. So let's just move forward and see what other data we can look at. So this is from the National Association of Realtors, yet another indication that markets are cooling. So we'll see here overall, month over month, so February compared to January, pending home sales dropped 4%. Okay, so that means less homes are going into escrow. With the rates going up, less buyers are qualifying. On the West Coast, month over month, down 5%. Midwest down 6%. The Northeast was actually up 1.9% month over month, and the South was down 4 points. So most of the country, pending home sales have gone down. So slowing down, cooling in the market. This is what we're seeing. So one more piece of data I want to show you guys. And again, all of these links will be in the description. So this is pending home sales from Redfin. Pending home sales. So the black here is 2022. All right. So 2022, we could see this is price drops. I apologize. Price drops. Okay. So we're looking at price drops right here. How many homes have dropped their prices? And I think we're going to continue to see this. I was actually able to get a client into escrow under the listing price. 15,000 under the listing price. That was in Bakersfield, California. Now, we did an appraisal, and the appraisal actually came up higher than our contract price. So it's a win for our buyers, which is good. So this is kind of where I'm getting at. If we put all these pieces together, I'm going to tell you guys why right now is a great time to be aggressive and try to get into escrow, try to buy that property, whether it's going to be your primary residence or you're buying as an investment. Okay. So as you see, price drops are increasing. Okay. So about, if we look right here, about 3% of active listings, 2.9, have dropped their price compared to the last few years. If you look over here, 2019 price drops went down. 2021, price drops went down. I mean, no one's dropping their price. Everything's going over asking, but we're slowly seeing an increase in price drop. So that's all good. So this is a time where I believe is a golden opportunity. Okay. So now why do I say that? Why do I say that? Why do I think this is a golden opportunity for you to get into escrow and be aggressive? Because the last 2 years we've seen crazy appreciation. As we saw in the Wall Street Journal article, this demand is still there. Even with rates going up, there's so many millennials forming households that need to buy a house. You can't live with your parents forever. If you're married, just got married, have had one baby or planning to have a baby, you got to move out of your parents' house eventually. You don't want to rent. You want to own. And there's a very, very high population of millennials who are in that age range where they're forming households. So I'm going back to the Kobe. Get the hell out of my way. All right. Anyway, staying back on track. Demand is still high. We're seeing some price drops. And again, you got to remember, real estate is a long-term investment. So here's why I think right now is a good opportunity because A, there's going to be less competition, and B, I'm going to show you guys right here. So we all know what's happening, right? The Fed is raising rates to curb inflation. As these rates go up, which will be temporary, and I'll show you that in a second, why I think that's temporary based on historical data. So these rates going up is temporary. Rates will go up to maybe even close to 6 to 7%, but they will not stay there forever. Once rates reach 6 to 7%, inflation will come down. Stocks will come down. Once inflation is back under control, because as you know, as if you watch my last video or if you've heard the news, I'm sure you have, Consumer Price Index reported 8.5% inflation year over year. So 8.5% is a crazy number. It's out of control. Inflation has gone up 6 months in a row. So we need to get that under control. Raising rates will do that. Once inflation is under control and stocks come down, mortgage rates are gonna come back down. So if you buy a house today and you pay 5%, you're not gonna be keeping that 5% rate forever. You're gonna have an opportunity to refinance in 1 to 2 years once inflation's under control. Once we are heading into a recession, once that is over, hopefully it doesn't last a very long time. That's why I'm saying 1 to 2 years. You keep that rate for 1 to 2 years, rates come back down, you're going to have an opportunity to refinance. Okay, you're going to drop that payment. And in 1 to 2 years, you're going to be able to ride the appreciation that's going to continue. Because this appreciation that we've been seeing, 10, 15, 20% in most areas across the country, is going to continue. Even with rates going up, home values are going to go up 10, 15, 20%. That's just what it is because of the high demand. So why do I think rates will come back down, right? How can I be so sure? Here's why. I'm going to show you guys right now. So this has happened in the past a couple of times. We're looking at 1980. Paul Volcker fights inflation. So back in 1980, end of the 70s and then early 80s, we had inflation was out of control. The Fed's funds rate was 11%. So Paul Volcker increased the Fed funds rate, which is what's happening right now, right? Rates were almost at zero. Now, the Fed's funds rate was at zero. Now they're at 3, causing mortgage rates to be around 5% right now, but it's going to go towards 6. So he raised rates from 11 to 20% to fight inflation. Inflation was at 14%. It dropped to below 5%. So raising the rates caused inflation to go from 14%, even more out of control than we're at right now. Inflation went from 14% to 5%. So it worked. Raising rates curbed inflation, which is exactly what's happening right now. Because inflation dropped, mortgage rates sharply declined from 18% to 12%. So I know it's hard to imagine, but mortgage rates were 18% back in those days. But as you see, as inflation was under control, mortgage rates dropped. Also during the same time, the S&P dropped by 30%, going into a little bit of a recession. That's again what we predict what will happen, recession. But raising the rates dropped inflation, which in turn dropped rates back down. Okay, one more example. Alan Greenspan, late in the 1990s, inflation doubled from 1.75 to 3.5. So not as crazy as the Volcker era in the early 80s and not as crazy as today, but inflation doubled. So what did Greenspan do? He raised rates from 7 to 8.5. Okay, so he took action a little bit earlier, and what happened? He increased rates, which is again what's happening now. Rates went from 4.75 to 6.5 in 1 year. Inflation responded and dropped from 3.5% back down to 1. Then again, what happened? Mortgage rates dropped from 8.5 to 5.5%, sparking a huge refinance boom. This is what I'm talking about. If you were to buy today at 5% or in the coming year at 6%, once inflation's under control, you're going to have a chance to refinance back down. I'm predicting into the threes. This is not financial advice. There's no guarantees or warranties, but I'm just going off based off of history. This is what happened, and this is what we expect. Again, S&P fell by 50%. U.S. entered recession when Greenspan made these changes. So again, that's what I predict will happen again this time around. So now's the time you buy the property, your rate's at 5.25, whatever the case. Just keep in mind, real estate is a long-term play. All right. So it's not, hedging the stock market. It's not betting on leverage. You're not longing or shorting. Real estate's a long-term game. So secure that property now. Ride that appreciation, because keep in mind, you're going to have a chance to refinance and drop your payment back down in the next 1 to 2 years. So that's it for today. That's our mortgage update. If you like this video, hit the subscribe, hit the like button. Let me know what you guys think. What do you think? Are we in a housing bubble? That's the other big question. Do you guys plan to buy now? Or are you guys steering away from buying because rates have gone up? Leave a comment. Let me know, what is your situation? Are you like, this is a good opportunity, I want to buy now, I'll refinance later? Or you're like, hey, I'm backing off. These high rates are scaring me. I don't want to buy right now because the payments are going to be too high. So tell me what you guys think in the comments below. I'd love to hear what you guys are thinking and what you're doing, whether you're buying for your family or buying as an investment. Let me know in the comments below, guys. See you guys next time.